Ladies and gentlemen, when it comes to trading, we have been taught by Wall Street, by people sitting in positions like I am right now, that a chart pattern is a chart pattern. There's a certain amount of volume, there's a certain amount of potential volatility, there's a price, and you look for the certain pattern you like, and as a generalization, you can react to that stock based on identical or similar patterns across the board. That is how trading works. That is how trading works. It's very easy to do that. It is the biggest scam on Wall Street, actually, which is why we tell you, people in my position, I don't tell you because I'm not full of shit and a effing liar. But what we do in my position is we basically say that if you master certain chart patterns, you could apply them to every name. While that is somewhat true, there is actually something called individuality. Not only are you an individual with your own strengths and weaknesses, but so are stocks. Not all stocks are created equally. Once you remove the price and the volume aside, they're still different. They react differently. Certain bullish setups on certain names will actually produce different results statistically speaking. I'm going to tell you why I bought Amazon tonight. I might come in tomorrow. I might be absolutely wrong. But I'm going to show you exactly why I bought Amazon tonight. And my point of this isn't to say, oh, you should be swinging Amazon. The truth is, if this thing gaps up or down tomorrow morning, I'm going to sell it and take my win or loss. That's what I do. I have Butterfingers. None of that diamond hand stuff that everybody has been touting on Wall Street. You know who I'm talking about. You want to know the funny thing about that whole diamond hand thing? 99.9% of traders that I know that followed Wall Street bets lost money. The irony, right? With that being said, thank you so much for reading our disclaimer in the beginning. And we're going to go right to it. And I'm going to explain to you exactly why. We're going to pull out a notepad and we're going to explain to you why Mark Melnick bought Amazon calls. And just for clarity, let's see. Don't even remember the strike I bought. All right, I bought next week's $3,300 calls, and I spent $46.84 per contract. And if you're a Newsbeat Live member, you get free feed. This is not a $2,000 service anymore. You get it absolutely free with the room subscription. You actually get my overnights and whatnot. And I'm showing you before the fact. It's easy to talk after the fact because I'm not here to just try to make myself look really smart or whatever, if I'm right or wrong. I really don't give a shit, which is why I'm talking about it now. The purpose of this video isn't to make you like Amazon. The purpose of this video is to show you a different way of choosing overnights and how I trade them and what I'm looking for. So we're going to take you to a daily, we're going to take you, we're going to pull up a one chart here on Amazon. There we go. And what I'm doing is, besides for all my trend lines, which looks like Spider-Man got drunk and a little excited, if you know what I mean, I'm going to show you exactly what happened and why I bought it. The only parameter I have up right now is actually the Bollinger Bands. It is a standard Bollinger Band on TC2000/free stock charts. Some of you might be using different chart setups and you want to know my settings. It just says average type of simple as opposed to exponential or front weighted. It has a period of 20 and a standard deviation of 2. That is how it's preset. I didn't change the settings. It comes that way. So if you go and you set it up like that and you just literally click in on this down menu, just says Bollinger Bands right here, you'll get the same exact thing. So what you'll notice is this is a daily chart. By the way, color matters. Color matters. Red versus green, open versus close. That's how I do it. My red bars and my green bars are versus open versus close. So if the stock gap down and then closed a little higher than where it opened, the bar would go lower, of course, but it would look green. Okay. So that is another key thing of how I do this here. So you'll notice that you're putting a green bar, the first green bar after touching the Bollinger Band support. Now you might be sitting here and you might be thinking, and I'll just make the Bollinger Band support, I'll just make it like a like a orange here so you could see it easier on the black background. So many people like white backgrounds on their charts. I love black backgrounds. I don't like all that glare. Um, once you go black background, you never go back background or something. Anyway, so you could see you clearly put in a green bar here above the Bollinger Band support. And just looking, I want to look in the past. I want to look in the past where you've put in a green bar on Bollinger Band support. You did it right over here on February 23rd, and the stock went against you if you went overnight that day. Fair enough. It happened right over here where you could see it hitting the Bollinger Band, put in a green bar for the first time after hitting the Bollinger Band, and opened up 8 points higher and literally rallied $60 the next day. Fair enough. Just missed the Bollinger Band here, almost hit it and then gapped up. Right over here is a very dramatic example. Here's your first green bar. Well, here's your, whoops, my head's in the way. I'll put my head in the middle. Here's your first green bar right over here on Amazon. It closed at $3,048.41. Literally opened up 113 points higher the very next day. Exploded. Okay. Right over here is another instance where you put in a green bar on the Bollinger Band support. You close at $2,960.47. We'll leave off the change at the end. You close at $2,960 and you opened up at $3,034. You gapped up $74 the next day, meaning not only did you gap up $74, you ran another 100 points higher. Okay. This is just looking from the information that we have. And you keep going back right over here is the last time it happened. Before that, we're back in March 2020. This is COVID era, world coming to an end, everything's going to hell. Look at that. Hits the Bollinger Band right over here, goes underneath it, closes, nice gap up the next day. Green Bollinger Band, nice gap up. Green Bollinger Band, nice gap up. You can make an argument here where it didn't. Um, just to be fair across the board. Here, put in a green bar after going through the bottom end of the Bollinger Band, literally gapped up the next day. Literally. So if you bought it at the close and sold it at the open, it's a good chance you make money. That's the point I'm making. Green bar right over here, hitting Bollinger Band, closes at 1752, gaps up the next day, opens up at 56. Yeah, this is back in the day when COVID era, where right before COVID era, this is 2019, where Amazon was 50% cheaper than where it is now. This is a little bit of a dramatic example here on Amazon. Hit the Bollinger Band and opened up a little lower, but then rallied. Another one, green band on Bollinger Band, gapped up the next day. Green on Bollinger Band, gapped up the next day. You could keep going back. There'll be some winners and some losers, but here's the bottom line. The bottom line is it has a very high statistical probability of working. Okay. So the first thing I'm going to put in here is, and remember, the whole point of me showing you this is we're literally giving the stock a sense of individuality. There are some names that I try this with, and it fails miserably on average. So what I'm really trying to do is really show you just almost a different way of looking at these overnights. So for me, closed with a green bar after hitting, and this is on a daily chart, just so we're clear, after hitting Bollinger Band support. So to me, that's a check mark. That's a check mark on Amazon. Not only that, is closing above an algorithmic support line that I drew. To me, I'm not going to go through every example, but that has statistical relevancy for me. Closes above, I'm not going to give you a course on how to draw lines and show you what's significant. We have a course like that in T3, but for me, it's conviction. Closes above algorithmic support trend line. So that's another reason why I liked it. Another reason why I liked it is what you'll notice is A lot of times when these earnings fill the gap, so right here was earnings, it filled the gap on earnings by literally 2 days later. After you fill the gap on earnings, it tends to have a lot higher conviction for me. Tends to have a lot higher conviction. Look, Amazon could gap down the next day. I could be down money. You know, I'm not going to be capped in hindsight and just show you winning trades. I'm just going to show you reasoning and logic, right or wrong. I have no idea. I don't have a time machine or anything. Fill the earnings gap. Another thing I like to look at is the triple Qs. And what you'll notice is the triple Qs also, similar to Amazon, when you put in a green bar by Bollinger Band support, you tend to, on average, not all the time, gap up the next day. And the triple Qs did the same thing. So that made me like it as well. So literally, I'm going to just add in another number here that the QQQ also closed with a green bar after hitting Bollinger Band support. So that was, you know, a very important thing for me because I feel almost the market could gap up tomorrow. And look, I don't know exactly where the Qs are now. The Qs are showing up 37 cents at the moment after hours as I shoot this video. That clearly does not mean shit these days. It could easily gap down or go up higher. And I just want to come to you from a very open and honest place. Another thing that adds conviction is the 8 still closed above the 21. So algorithmically, it's in an uptrend. So the exponential 8 moving average is trading above the exponential 21 moving average. To me, that's a big deal. If you look in the past, and by the way, we're referring to this yellow line here, which is my exponential 8. It's just above the blue line. To me, I think that's very algorithmically strong. You have a better chance of gapping up. What you will notice is the times, if you actually, just to give you quick results in a nutshell, when you go back to the times where it didn't work out so great, the 8 was below the 21. And when the 8 was above the 21, it worked out magically. Like even over here, you see, for example, like here's one of the cases where it failed. We got a green bar and Bollinger Band support. 8 was below the 21. Here's where the 8 was below and it worked. Again, if the 8 is above, you tend to have a better hit rate. So that to me, the fact that the exponential 8 is at $3,351.11 and the blue 21 is $3,336.49, a lower number, meaning the 8 is on top of the 21, is a very important statistical thing. Not only that, when you elevate in volume with that green bar compared to the prior day, it adds a ton of conviction. So number 6, higher volume than prior day. Higher volume than prior day. Let's see. I know I did this homework already on the name, but if you actually look at some of the, and I want to show you a failing example, are always the best examples to use. People don't realize a lot of people like to shun their losing days. So right over here is a perfect example, or trades that didn't work. I'm the opposite. I highlight them and learn from them. Like people don't understand your losing trades are it's a tome of wealth. How do you think humanity learned anything if not by screwing up? I would probably guess there are thousands of screw ups before you got one thing nailed down. So you could see even right over here when you closed above Bollinger Band, not only was the 8 below the 21, but there was lower volume than the prior day. And then when you hit the Bollinger Band again, the volume was higher than the prior day, and that's when it gapped up and worked. You see that? And again, you'll have this information right before the market closes. Like I usually buy these things right before the market closes. For example, today I bought this at, 3:54 p.m. is when I posted the tweet. 3:54 p.m., like 6 minutes before the market closed. So, this was some of my reasonings for buying it. I have a few more, and it gets a little complex afterwards, and we're going to start talking seasonality and things like that, and start looking for statistical frequencies with the dates. But because it's going to be hard to just constantly go back and show you the dates and show you all the numbers, which is why I'm not going through it, but I'm telling you during certain months, this strategy works out better than others. And again, with all this being said, Amazon can easily gap down tomorrow and I could lose money. But I just wanted to show you a different way of thinking. I am not saying that all the things you see here are good for every other name. It might be, some of them might be, some of them might not be, but for Amazon, it's its own animal. It's an individual just like you are. And if you could treat stocks as an individual as opposed to just a chart setup with a simple scan, I mean, people who scan stocks, they practically never bat over 50% over 1,000 samples. They'll never bat over 50%. It's magical how badly it fails. It's kind of crazy that when you actually do the scans for bullish things, what I realized is everybody who's setting up all these, I use TC2000, it's one of the best scanning tools out there, which is why I don't run scans. But for some people, they utilize it differently, so I still believe in it if you're using it for the right thing. But it's kind of funny. People who take all these scans, for example, let's say you're looking for bullish names based on whatever parameter you're looking for. If you took 1,000 of those trades to the short side, I would from what I've seen in my experience, you would be as close to 100% chance of making money in the long run for overnight gaps if you actually did the opposite. You wouldn't do well, but you would be up money. Same thing with, like, there's a statistical frequency with earnings names. Take any company trading less than 250 million market cap into earnings and short them. You will make money over the entire season, usually most of the time. Yes, there's a chance you get shot in the face because one of these names gap to the moon, but there's no logic or genius behind it. That's why I find it funny when some of these gurus out there on Wall Street, they like to short small cap names, and I'm just like, yo, bro, whatever floats your boat, but don't pretend you're bringing any value to anyone, because it always ends up that one day you're just going to blow out your entire service with one day. But it's a good thing these gurus have zero accountability, right? So these are other statistical frequencies in which I'm trying to explain to you and show you there is sort of that differential out there between names. You got to approach them. You'll notice, like, I'm, obviously attacking some of the biggest names on the planet is generally what I go after. Amazon, 1 point whatever trillion dollar company. And yeah, there's definitely something to be said. There's definitely something to be said on an individual name. So again, I'm going to just show you exactly why I chose it. I wanted to keep this video simple and sweet. This is the reason. This was my reasoning, and I shared it with the room. And I know I'm coming to you guys after I bought the calls because I do a nighttime show. But the whole point wasn't to make you like Amazon. The whole point was to give you a different way of thinking when you're looking at your daily charts. Just know that every stock you look at is an individual. It has its own characteristics. It has its own things that work for it, its own things that, statistically speaking, doesn't have to be 100%, its own things that fail for it. And I just wanted to show you my logic behind this. Hope you guys really enjoyed this video. If you look in the link of the description, you can have how to overcome psychological toxicity in your trading. It's a free ebook. Click the link in the video description if you're interested. It costs you nothing. Hope you guys enjoyed this video. Happy trading, make money. I'll see you tomorrow morning on the Newsbeat live trading broadcast.